Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm reading through all the comments. I know we've got a lot of people who are very excited about um, this bull market that's coming. I do want to remind everybody that sometimes it takes longer than what you think. I'm going to prepare yourself because I've been in this for a while. And 2016, I saw the bottom. I did buy some companies, and it took a long time, 4 or 5 years to get here. But at that time, I didn't really tie it very well to the real estate market. The real estate market was heating up in 2016. That's when foreclosures really kind of dried up. We started to see prices, and we saw inventory tighten up. We saw prices starting to move higher, and it did provide a little bit of a tailwind. And that's where a lot of the precious metals stocks and copper diversified mining stocks, they all bottomed in that 2016 timeframe. But that's 4 or 5 years ago, and they've had some really good gains. At the end of the commodity bull markets is when things really go crazy. But that was the beginning. So 2016 is the beginning of the bull market. I say we're at the beginning of where things are starting to heat up, and I think that we have technical analysis. It is somewhat reliable on the on the short to medium term. It's a lot more reliable on the long term. So the short term is still. I don't want people to get too positive until we start to see, highs breaking and making new 52-week highs and stuff like that. So remain in a relaxed position. Don't expect the world. Don't hope for the best and prepare for the worst. That's kind of my take on it. And I've been writing these things for a little while now. It's been years. When I cost average into positions, I've been doing it for years. So I'm preparing what I think is a big structural move that is coming for commodities and precious metals. It may never come. There is that possibility, but the data that is with all the charts and with all of the different ratios, it is suggesting and how it aligns with the residential real estate market. Basically, how I set up this entire thesis, it is saying that has a high likelihood that it is coming. But I just need people to prepare themselves and remember, diversify out. You don't want to put all your eggs in one basket. I want to make sure that you guys are prepared and that I am telling a compelling story. I get it. And this is kind of how I see things, but be careful on how you position. That's all I'm saying. I still have healthcare related mutual funds. I still have emerging markets. I don't have all my money in commodity mining companies. Sometimes mining companies will let you down. That's why I have so many royalty companies. That's why I have physical precious metals. That's why I have real estate and I'm diversified out. I can tell you this, some mining companies don't work out very well. Mining is a very tough business, and I saw a lot of mining companies not do very well last bull market. And that's why I have such a large physical precious metals position and why I use ratios to swap it back and forth. Check my playlist out to check that video if you haven't seen it yet on swapping precious metals and increasing one's physical holdings. And it can be a very powerful wealth building tool doing that method. But I don't want people to get too excited. It'll come, but we may still have to wait another 6 months. Keep that in mind. Patience is your friend here. And I just don't want people to get too, because everyone's saying, if you think, I'll just read some quotes here. If you're thinking I will wait to see what happens, you will be left watching the train pull away at high speed. Maybe not. I'm in it. I'm riding it. We'll see. It says, Andy, I have full faith in your analysis and thesis. Short term, anything is possible. I completely agree with that. But long term, it looks solid. I agree with that. You're always making a very compelling case for a commodities bull run. And that's what I'm doing, is I'm trying to open up your guys' eyes for a compelling case for a long-term commodities bull market. In the short term, guys, news, anything can throw this all around. Anything. And I don't want you guys to think that this is just going to go straight up. Nothing goes straight up. It zigzags all over the place. We'll have some fake outs. It's going to happen. It says, Andy, I was watching Kitco News, and they had a guest talking about silver could be shifting away from gold as being a monetary tier 1 asset. He stated that it may be better to look at the copper to silver ratio as opposed to gold to silver. What are your thoughts on the subject? So it doesn't matter to me if it's monetary or not. All I focus on is the ratio. And the copper to silver ratio is fine. You can do a ratio of any asset to any other asset. And whatever's really cheap is the one that I would look at. And then I would look at the market balance ahead of us. And the market balances for a lot of these precious metals, base metals, energy sectors, they all look very, very good. Uranium, oil, natural gas, doesn't matter. Any of them. They're all good. Copper's really good. So what I do is I try to find an alignment of all this data where we have cheap valuations, good market conditions, and market balances that are all jacked up. And that's where I put all my money. I put a lot of my money, my speculative money. I just divvied up. And those sectors that I think are very good are platinum, silver, gold, the precious metals. I think copper, nickel, and tin, those are really good for base metals. I really like those. And the energy sector. Anything in the energy sector, I think, is going to do very well. And I'm looking at solar. I don't know as much about solar. I don't have that confidence in solar yet. So I'm trying to build a small position and rare earth metals is good too. In solar, just in case they throw trillions of, a bunch of money with a T, trillions, in that sector. But I just don't have that confidence. I don't know how to value it very well. But I do know it's being adopted very, very quickly. So I do want some money allocated to it. Andy, it sounds like we were entering the era of the commodity. After you make your first billion, can you please make sure that you keep this channel going so that we can catch up? I've put my dog on eBay in order to make some money to buy some more uranium stocks. Thanks for the content as always. Uranium, I think, is one of the best. It is one of the most compelling sectors. I also think oil and natural gas are going to do very well over the next commodity bull market. Now, again, interest rates. Interest rates are still low. They're very close to the dividend yield of the S&P 500. If they go up, and if we see the dollar go down and interest rates go up, I think we are going to be positioned very well. Now, if something happens in the short term where that goes in the opposite direction, we are not positioned very well. This is a very volatile area to be in. Uranium is very volatile. And right now, everything's aligning for this big bull market. Everything. But we could see short-term problems. And you better be prepared if you get cut in half. I mean, that's how much money you want to put in it. Hey, this could get cut in half. Do I have the right allocation to that sector? Just want to make sure that you guys know that. But it does look very promising. I'm very hopeful. The charts look very good. Remember, nothing goes up in a straight line. And we could still be in a further consolidation pattern as well. That is another thing to think about, is we could be consolidating longer. But a lot of these patterns are breaking. So I want to remain as positive as everyone else. The valuations are ridiculously low, and the market conditions are behind us, pushing the wind at the back at the moment. So it does look pretty pretty awesome. I just have to smile because it's good that we can notice this and that we have confidence in investing in these sectors, knowing this information. So I think that's pretty good. And it said I made more each trading hour today than I clear in 2 weeks. Well, good for you, but remember, I'm not a trader. I'm an investor. I'm in this for the long term. And if you guys can take my charts, you can do whatever you want, and try to trade it short term. I'll just tell you this: it's a lot more stressful, and sometimes it doesn't work. So I just want to let you know that up front. I'm an investor who is going to play this entire bull market, and I'm going to ride through it. It's um, far less stressful, far less risky. I have to do work at work, and I can't be, trading and going in and out, basically getting all stressed out. Here's one: the beginning of the beginning. I agree with your paradigm, Andy. If the money flows happen, then $3,000 stocks like Amazon could easily result in four-figure oil company stocks. Maybe. It depends when peak oil hits too, and it depends on how fast people adopt electric vehicles and if the grid can even adopt that many. I think we're going to have oil for a while, but that's me. I don't think it's going to be adopted as fast as what some of these people think. And I think we're going to run into mineral shortages before they can try to really pump these things through. I think copper, silver, and platinum, they're all good bets, man. I really like the setup in all those. And obviously everything energy related. Hey, Andy, love the updates. Can you go into US and global nuclear power demand sometime? I love the technicals on uranium, but I have a hard time connecting price to demand. Maybe I'm the only one, but thanks for your time. So I do want to cover this. And there's two components to a pricing of uranium or any commodity in general. There's the dollar price, because commodities are priced in dollars. Inflation in the dollar drives commodities higher in general. And usually what happens is the demand may or may not even be a huge factor. What happens is it's money flowing between sectors, and that is your demand. So what drives a stock higher is money flows. And this took me a long time to figure out. Like I thought, oh, valuations and this and that. Valuations do, but it's not really what drives the stock higher. It's money flows. It's money flowing from sector to sector. People have to buy what you have in order for the price to go up. It's money flowing into what you already, what you own and what other people want to own. So it's money flows. So the biggest impact for commodities is that they're at low valuations, meaning that the money's not in there against other assets. So stock to commodity ratio, and that's really low. And you want the money to flow into it. Now, more money will flow into those that have that demand supply imbalance. Red Cloud, if you go to Google and you type in Red Cloud market balance uranium, and you type in and you click in images, you can see the market balance that they are projecting on the market. That is your supply-demand imbalance that will result in a deficit, and it's a growing deficit over time. That's where the opportunity is for the supply-demand and that ratio of the gold to uranium ratio to compress. That compression of the ratio is your supply and demand, in my opinion. The entire curve gets shifted higher with gold going higher, accounting for the money supply growth or inflation. So gold going higher, and then the ratio compresses and goes way up if this is uranium and this is gold. So gold's a moving target higher, and then the ratio, if it's way down here, will compress against gold as gold goes up. And that's where your outperformance of uranium against all other assets is going to occur. So I'm not one looking. I mean, we can look at that. The red cloud. I've done other one. You can look at my playlist in the uranium section, and you guys can see what that looks like. You can check out those other videos. I've also done individual videos on the channel with like Deep Yellow, Encore Energy, Baseload. I think I did one on Goviax, Bannerman. I've done one on Bannerman. Those are kind of my favorite ones. And you can see those videos, and I just really go over their presentation that they have on their website. So when I research companies, and what I do is I go to their website and I look at their presentations that they have, because they know the best about their company. I don't even use anything else. I don't use ratings or anything like that. That's all in the garbage. Like I used to do that in the beginning, and it manifests itself in nothing. So I would just go to the company's website, look at their presentation, and read through it. And one of the key factors for me for picking a company is large insider holdings and people who are pretty tight with their money. They're not frivolous in general administrative expenses and stuff like that. So that's what I look for, and a really good chart pattern in a very good sector. That's all obviously a good one. This has been a crazy year for uranium. Sprott Trust is buying. Most of the miners are using the equity pump money to buy physical uranium. So a lot of the new players that are supposed to sell uranium are now sitting on physical uranium stockpiles. I would have expected a larger uranium price squeeze after all of this buying. Maybe. I think the big move is going to come when the utilities come to the table and start buying a lot. So hopefully all this stuff turns out for everyone. I really hope this is, gonna work like we have. So someone, Drury Rich says, interest rates cannot increase in a super leveraged debt economy. They will remain low like Japan. It's called stagflation. No increase in the economy and commodities going up, up, up. Well, here's the problem. You will sacrifice the dollar if you have an increasing housing market and demographics. Japan has a declining real estate market, and the demographics are smaller. So they can't get the inflation, so they don't care what their interest rates are. They can keep them low. If you're in a very high inflationary environment, you're going to have to raise rates. Otherwise, your currency is going to go to blah. It's going to go to nothing. So I think they're going to have to raise them. That's going to put them in a very difficult position because of the leverage that they have, in our economy. So I don't know what's going to happen. It's going to be a very interesting mix. He says that peak oil has already happened. America was able to use fracking, but that was going down very rapidly. We will have 5 million barrels of deficit of oil by 2025. By then, oil will be in the hundreds. Same with uranium. Same with gold. Peak gold has already passed. Yeah, I think peak gold's 2020, 2021. It's any time here. But gold will be revalued because of debt. Probably, if you compare how much monetary base has increased, around $30,000 to $50,000 per gold. Look at coal. It's at its highest historical level, well beyond the peak of 2018. Enjoy the ride. My best choices are Gazprom, Kazatomprom, Thungala, SCX, Yancoal, Surgutneft Gas, Baytex, Rig, Bor, Seadrill, Diamond, Diamond Offshore, Technic, FMC. On a pullback, I would buy BTU and ARC. Good luck to all. Yeah, I think it's potential that peak oil has already happened. It could. And everyone's just jawboning. And I don't know if the Middle East is pumping flat out and it's just the prices, and people, they don't want to worry anybody. So obviously they're not going to tell anybody that we hit peak. You're just going to see prices keep continuing to go up. And it's going to be very weird when that happens. We're going to see currencies collapse and other stuff kind of down the line when people figure it all out. Yeah, there's someone wrote something about helium. I haven't looked into it yet, so I don't have anything to comment there really. So I don't have any mining industry expertise. I just read all this stuff on the internet. I'm in engineering, but I'm in manufacturing, not in mining. Just to let you know. It says, oh my God, this decade will be huge for commodities. Hopefully that's the case. How long can they prop the market up? It's as long as interest rates stay low. When interest rates go up, market's gonna roll over, and all the money's gonna start moving around. But that's what I've got. I just wanted to kind of go over all this. If you guys have any questions, please put it in the comment section. Give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.